And we're live. Welcome everybody to another episode of Keyrock Streams. Thank you everybody for joining us today. We have a great group of experts on a very interesting topic. We'll be talking today about BTC Treasury companies and trying to understand and unveil how they work, how they operate, the opportunity and the risks behind this trend in the market. So first of all, I'd like to introduce our guests today, starting with Markus from 10x Research. Joining us today, we have Pierre from Bitcoin Bot Company, Alexandre, CEO and director of Bitcoin Strategy at Capital B, which has just been rebranded. Congratulations for that. And Gary Cardone, investor into the startup ecosystem since a very long time. Welcome, everybody. So we can get started today. We're going to be discussing, feel free to jump in any of the topics as you wish. The context for today, Keyrock just issued a report on the topic, and a lot of very interesting information has come out on the trends into this market. So I'll just kick it off with a couple of the key points that we have published to get the conversation going. Bitcoin Treasury companies have accumulated more than 800,000 BTC, which is equivalent to 4% of the entire supply of Bitcoin up to today. So definitely is a very important part of the market. Nonetheless, it only contributes to around 0.5% of the price impact in 2025, which we expect that is going to change moving forward. And what we see in the market is that the equities of these companies are trading in average at a 73% premium to their Bitcoin holdings. So with that context in mind, we have brought a group of experts to educate and discuss on the topic. So we're going to kick it off. As you answer your first question, feel free to introduce yourself first and get into the topic. So we'll start with, why are public companies buying Bitcoin into their balance sheet? What is happening in the market? Who wants to take it off? Maybe we can start with Alexandre.
Yeah, I can start if you want. So Bitcoin is the only asset that the United States government does not want to sell. There is a reason for this. It's the only asset with absolute scarcity and global demand. And it's been the best performing asset over the world over the last 15 years. And so it makes sense to use the elasticity of capital markets to accumulate the most inelastic asset on earth, which is Bitcoin. Capital B on our side, we are Europe's first and largest Bitcoin treasury company. We started back in November 2024 when it was not already very trendy. And we've been the fastest, best performing stock over in France, plus 2,000, 3,000% of performance. And that just shows, as you have seen with many other companies, the power of adopting Bitcoin on the balance sheet and the power of believing and having long-term conviction in the fact that the only thing better than Bitcoin is more Bitcoin.
What has changed? I mean, this was the case already a couple of years ago, correct? I mean, Bitcoin's great. What's different now? Why are all these companies starting to get Bitcoin into their treasuries?
So there is a thing, or maybe I would let Pierre or Gary comment.
Yes. Happy to hop in. If we rewind to 2020, when Saylor first put Bitcoin on his balance sheet, I think that it was really solving for a treasury management problem of he had dollars cash on his balance sheet. He wanted to continue to have the option value of holding cash. And that cash was losing value, right? It was getting diluted, and that dilution was accelerating with the COVID print. And so I think that we can start from just solving a practical problem to then it accelerated really because he stumbled into the fact that there was really great financial engineering here. And so that's where we saw the emergence of convertible bonds. And the root cause of that is actually Bitcoin's volatility. Something that people had been criticizing, especially on Wall Street, had been criticizing Bitcoin for was that it was too volatile. Turned out to be a very strong advantage from a financial engineering perspective. And so that's, I think, what has driven to today, 5 years later, there is an acknowledgement of this kind of product market fit.
Yeah, I think it's, if I may jump in here, I think that's actually a really good point from Pierre, that actually the narrative has changed, right? So back then, of course, the worry was about, 25% money printing. It was about like a lack of, investment opportunities, really, not spending any marketing money during COVID because nobody was traveling. So basically they had like excess cash, and the cash was sort of like devalued. But I think, the story has, of course, changed dramatically in the sense that interest rates are up, and there's a lot of other opportunities and a lot of spending going on. So now the narrative is, of course, because of all this volatility, how can you monetize the volatility? And I think the interesting question is that most of the companies, I think, that have recently announced they're going to buy Bitcoin and put it on the balance sheet, they have actually very low growth rates. And I think it seems to be that one of the turning point here is that a lot of companies cannot really achieve these high growth rates that Bitcoin has been achieving, and it might make sense just really to put those assets on your balance sheet that are performing well, and just go with it. And I think shareholders have been revaluing this and have been jumping on it, and happily handing over capital, and companies can really go and raise more capital. And of course, that sort of like drives the volatility, and high volatility opens up the right tail of the option. Really, that's it. And I think that's really the interesting narrative here. And we have seen this, of course, across the globe, but I think it's also more that the mark-to-market, accounting standards really kicked in, end of last year, that really now, opening the doors for a lot of companies to put Bitcoin or other digital assets on their balance sheet, and really have a live mark-to-market valuation, sort of like, valuing it at cost basis.
This is interesting. So in your view, any company that is not achieving the growth rates that would justify for them to invest in their business should put all their balance sheet into an asset like Bitcoin. Actually, makes sense. I mean, it's an interesting narrative, and a way in which we could understand adoption in a better way. These companies are trading at a premium at the moment, correct? How long does this last, and is it sustainable? I mean, do we continue the expectation that these companies can roll their cash flow into buying more Bitcoin and issue more debt to buy more Bitcoin? How long does it last? Does it compress and at some point start trading at parity?
Well, I would argue we're very early in that. So I think that if we look at, for example, Strategy, they are very unlevered currently. And it's interesting to hear people accuse them of being over leveraged when the shareholders might have an opposite view, that they are under leveraged. And I think that it really has to do with the sophistication of credit markets. And so as credit markets and credit allocators become more comfortable using Bitcoin as collateral and using Bitcoin Treasury companies as collateral, that will unfold. And so I think that we're still very early there. And so the MNAV, the multiple that they're trading at, I would expect that the companies will grow into those MNAVs rather than us seeing the MNAVs collapse.
Interesting. So bullish on the narrative. So as an investor, what arguments would you have for buying Bitcoin Treasury equities instead of pure Bitcoin or holding the BTC ETF?
I don't know, maybe I can bounce in here, Gary Cardone. Look, these companies are going to do this. I think these companies are doing this as a lifeboat. If you notice, most of the companies that started doing this were beginning to see the friction and the gravity of building a business in a marketplace that we say is a free market. But in truth, the market around the world hasn't been a free market for probably 30 years. We have Google and Facebook control 70% of social. You got Visa, MasterCard control 72% of all the credit cards. You got 4 major banks that control banking. So you don't really have an open market. And I think the people like Saylor, people like myself who have been building businesses that build businesses based on EBITDA profitability, when you can't hire coders back 4 years ago because Google's paying $300,000 for somebody that really deserves $150, it really drove a bunch of entrepreneurs like me to start looking at, hey, why am I spending so much time with lawyers, accountants, HR, human beings, when they're all getting more expensive, they're getting less productive. And I have this thing called Bitcoin that looks like it's prepared for the digital age. And my bet is my analog business is starting to have so much friction, I can't even compete in the world that we're getting ready to go into. And I think it is those first movers. And I don't think this first move is over. The problem is, why would I pay a 72% premium to buy Bitcoin? Now that, if that's accurate, if you said 72% premium currently, I'm going to buy Bitcoin. I mean, I own MicroStrategy. I will probably participate in some of this market. But to me, if it's good enough for Saylor and the US government, we're all pumping, hey, buy Bitcoin, why would I go buy a paper derivative of that? Right? Now, why would I do that? Because I have money trapped in the system. I have money trapped in the legacy system, and I want access to Bitcoin. So I think we will look back in 10 years and realize these companies actually made an awesome move. I do not think all of them are going to survive. Just because you're putting Bitcoin on your balance sheet is not going to immediately make you super company. And I think that's going to be the challenge. Who is actually operating a business that reduces litigation, reduces accounting? You know, Saylor could end up with a business that has very, very small amount of people running a really, really successful industry. For me, just to end here, some of these products are getting very, very complex. And so this is where it's starting to get so complicated. I don't understand, do I own common shares? Do I own preferred shares? What do I actually own? And I always get back to Bitcoin as a core holding because it offers no human error risk. Anytime I buy any of this paper, I have walked into human error risk.
Maybe Alexandre, you want to elaborate on that since your company is offering one of these products? What do you think are the advantages on these compared to just, as Gary mentioned, going to the roots?
Yes, it is true that it will always be potentially more risky to invest in a company with a management team than in Bitcoin directly. That's for sure. And then on the other side, it's also true that a management company that is purely based on the conviction that they will issue securities to acquire more Bitcoin on behalf of the investor might have more probabilities to outperform Bitcoin than 99% of operational companies. So it seems like there is a balance to everything in life, and it would seem like for traditional Bitcoin maximalists, there is no situation in which an investor would not want to own Bitcoin directly in some way, and to potentially want as well to have a financial exposure to the only type of companies that are also Bitcoin maximalists and that minimize the risk from a Bitcoin principle perspective, meaning they literally intend to never sell and hold the Bitcoin forever. And by securitizing Bitcoin, which involves a bit of complexity because it's a bit of capital markets, then it's true that these companies can access capital markets in ways that individual investors can't necessarily. And so it's basically the best risk-adjusted way to outperform Bitcoin. But at the same time, 90% of the population doesn't have Bitcoin. And so the first step might actually be to first own Bitcoin. And then when you are on a Bitcoin standard and you want to have more performance, but fully based on Bitcoin, then the Bitcoin Treasury companies can be the best ways to do that. And so, all of these financial products might sound complicated, but at the end of the day, what the Bitcoin Treasury company is doing is buying more Bitcoin for you.
Just out of curiosity, Alex, what is the premium at which the shares of your company are trading to your Bitcoin holdings at the moment, if you would know? Something you can share with us?
Yeah. So we have also a dashboard that we just published 2 days ago on cptlb.com. And there you can see that the premium is 5x, 5 to 6 to 7x, depending on the price of the shares. And that's on a fully diluted basis. Currently, we have 200 million euros of Bitcoin on the balance sheet, and we have a market cap of about 500 million and a fully diluted cap of about 1 billion. Entonces, in this context, what you realize is that it's not really a premium. It's like saying that people would be valuing Hermes or L'Oreal based on their stock, which is not the case. You value Hermes or L'Oreal or Apple based on their future potential of earnings. And the Bitcoin Treasury company, their earnings is the Bitcoin that they are able to add on the balance sheet adjusted for the dilution of the securities they issue. And so what people are saying is that we could be able, in some period of time that they accept, to get the net asset value of the Bitcoin to where the fully diluted market cap is right now. And each investor will have its own time horizon. And why would they pay more now to wait for the future in which we would have the net asset value at the place where the fully diluted market cap is today? It's because they see that since the launch of our strategy, we have been able to do that in over 5 months. So maybe over time it takes longer. For strategy is 15 months. But what that means is after 5 to 15 months, all of the new securities issued to accumulate Bitcoin is more Bitcoin per share for the investor, and at constant premiums, that is even much more Bitcoin. So much more Bitcoin exposure. So as Gary said, at the end of the day, it is indirect Bitcoin type of exposure. It is not Bitcoin in your own wallet. That is for sure. So there you take a bit of risk. At the same time, publicly listed shares are potentially the best liquid way to get the potential to get out as well for an investor. So as Pierre said, as the financial industry is getting used to collateralizing Bitcoin and considering Bitcoin treasury companies as normal companies in traditional markets, then you will see the application of multiples of earnings come to Bitcoin treasury companies, and those multiple of earnings is represented by the premium today.
Let me like try to go into that thought there. So you let me see if I understand this correct. So you're saying, okay, we have a Bitcoin per share ratio, correct? And the expectation is that as time goes by, you're going to make more Bitcoin, and that's basically the argument to justify the value today. Because in any case, if we look at the history of MicroStrategy, they have 11 times more Bitcoin today than when they started, correct? So you say, okay, there is this argument of growth. How do you fine tune to know what is the right rate of growth that investors should be looking at when buying these companies, correct? What is the rate of growth that they should be expecting that you're acquiring Bitcoin at compared to your equity for it to make economical sense compared to just buying Bitcoin?
Oh, for the company, as long as the premium is above 1, and of course, in the best situation, largely above 1, it will be accretive to issue securities to accumulate Bitcoin for their common shareholders, because on the long term, on a Bitcoin standard, you increase the Bitcoin per share. So that's the first point. On an investor standpoint, investors that had shares of Capital B back in December, compared to if they bought in December and they waited until March, April. In March, April, we were able to increase the Bitcoin per share by 7x. Okay, so what that means is if you paid in December a premium of 7x, well, the company took 4 months to get you back to the net asset value of your investment. And after that, it's full, any type of new increase of Bitcoin per share is a form of levered Bitcoin exposure without liquidation risk, except, of course, for some counterparty risk that you have because you still invest in an operational company. So investors that invest in Bitcoin Treasury companies, they have a time horizon trade-off where they say, okay, I'm ready to wait for this company to get the increase of Bitcoin per share to where is the premium right now. And then they will know that every Bitcoin per share increase is an additional value for them. And what we've seen so far is that premiums in the industry between 2 to 5 are quite attractive, and premiums between 5 to 10 and more can seem for some short-term investors look a bit high. But people that bought Metaplanet at 10x, 20x premium last year, they are much better off right now than if they had held Bitcoin from a pure financial perspective. So it's more a question of time horizon, and I would like to caution investors that Bitcoin treasury companies like Bitcoin is a long-term strategic investment.
Hey, Juan, can I ask a question that I think if I'm in the audience, I'm thinking about right now? Alexandre, so I don't know how many companies are doing this right now, but how do I decide as an investor which is the best, cheapest multiple that I'm paying to go into a strategic Bitcoin reserve company? Like, of the 40 companies, some analyst is going to say, hey, it's cheaper to buy this company than that company. Can you walk me through who's actually the most effective Bitcoin optimizer, for lack of a better word? And how would I measure that?
Yeah. So when we launched the company back in November, there are thousands of companies with Bitcoin on the balance sheet. But at the time, I really only recognized Strategy and Metaplanet as fully Bitcoin maximalist, laser eyes focused on maximizing the Bitcoin per share. And so that goes with a dedicated team, a dedicated person, a dedicated strategy, and you can feel that and see that in communications, in the team that is involved, and in all the actions around having an effective business unit.
Just analytically, though, I shouldn't have to look at the team. I should just be able to look at the analytics, right? Like, who's buying Bitcoin at the least multiple? That is what I would be interested in. And I'm not trying to throw the show off at all. I just think the audience is going to be interested. How do I decide?
Yeah. Okay. So from a pure analytics perspective, you can look at the multiple together with the speed of the months to cover the premium. That's a point that has been discovered by Adam Back.
But that's the speed is only going to be relevant if the price is constantly moving up, right? The months could, if you started buying at 150 and the market went down to 85, those months are going to elongate, right?
It's possible.
Well, no, it's mathematically.
I think we're seeing this already.
Right?
When you compare like Metaplanet, right? It was trading at a multiple of 6, like, a couple of months ago. And I think over the last months, Metaplanet is down something like 30%, versus Bitcoin actually went up 15%. So we're seeing already the switch. And I think, Gary, when you look at it from that perspective, actually MicroStrategy is probably the cheapest one, and it just like, 70% premium. And I think the interesting aspect here really is the company is so large, and as Pierre was saying, it can tap into the credit markets, and it can actually accumulate the Bitcoin over time, and they're not doing anything else. So the question, of course, is this premium even sustainable? And when you look at real estate companies, they usually trade at a discount to actually the assets that they're holding. So I think over time the premium is coming in. And I think, when you look how MicroStrategy's the premium peaked during the, around the Trump election, I think at a multiple of 3, and has slowly come in. And, we calculated that MicroStrategy has raised around $42 billion in capital, and 19 billion was actually raised with a premium, above 1. So basically, it's really this sort of like donation, or as MicroStrategy calls it, yield, that really caused really this, I guess, the Bitcoin per share to go up. But I think they have been extremely careful to really not crush the NAV, and they have slowed down, immensely their capital raising over the last couple of weeks and months. I mean, you look at, the 30-day run rate, how much capital they have been raising is just like 1 billion. And it really peaked around, in December, when they raised like 30 billion in a 15 billion US dollars in a 30-day window, and now it's just 1 billion. So I think MicroStrategy has been very, very careful managing this NAV, that it doesn't drop below 1.5, because at one point they cannot raise cash anymore, and when it gets closer to 1, I think then basically it's just really the Bitcoin performance that they can do. And I think a lot of investors, have bought these companies because they assume that, like commodity companies, that would have large or huge operational leverage. But I think, as we know from, history of commodity bull markets, it's usually that corporate management kind of screws something up, they overinvest at the peak, and basically they don't generate really the yield or the operational leverage. Of course, with Bitcoin, it's a little bit different. But I think when you talk to the normal investor, they just assume that MicroStrategy has huge operational, leverage or financial leverage. And in the end, the convertible bond, I think it's just 20% leverage overall that it really adds to it. So there's not a lot of leverage. It's really just that they were able to communicate this to the market and give the impression that they're highly leveraged. And I think that's why people were willing to overpay for the NAV. But I think we're seeing already how the NAVs really, come, crumbling down. I think we had like a month ago where Semla was trading really at an NAV below 1. And I think now it ramped up again the last couple of weeks. But I think, anything above sort of like 2, 3, the investors can actually lose out a lot. And, MicroStrategy had a turnover value, all the shares traded, I think on November 5th, something like $40 billion. So a lot of investors that bought there actually are still underwater, despite Bitcoin, is up 50-60% since then, right? So I think it's not so straightforward from an investor perspective. And I think that's why, MicroStrategy now at just like 70% or 70% premium looks actually among the cheapest among, all the others.
If we look historically, so when Saylor started his buying Bitcoin in 2020, the NAV was north of 6x. And in the bear market in 2022, the NAV actually went, or the MNAV went below 1x. And so I think that on one hand, it is a reflection of market sentiment that in a bear market, we would expect MNAV to compress. I think that also in a bull market, we would expect MNAV to expand. And the reason is, I think, twofold. One is, let's look at the treasury companies that are trading at a 1x MNAV today. We call them ETFs, right? So why are they only trading at a 1x MNAV? It's twofold. They don't have a monopoly on the issuance of the shares. So the ETFs have authorized participants around them that are competing against each other to deliver physical Bitcoin to the trust in return for shares. And so it is third parties that are capturing the value of the premiums that really emerge with Bitcoin because of the volatility, right? Because the spot market is moving faster than the financial market, and that is what is causing there to be a dislocation that then gets arbitraged by third parties for an ETF. With a treasury company, that actually gets arbitraged by the company. And so the company has a monopoly on the issuance of its own shares, and so that value accrues to them. and that just fundamentally starts a flywheel effect of accretive dilution. And then the expectation of future opportunities to arbitrage between the shares of the company and the spot Bitcoin then commands a premium. As long as we expect, it really comes down to what is implied volatility. And so I think that the MNAV, a big part of the valuation of it is what is implied volatility. And that comes down to future expectations, right? And that's, I think, challenging for equity investors in any context is what are their expectations of the future. The other part that is missing for an ETF is that the ETF cannot lever up. And so they cannot go out and do a convertible bond. They can't go issue preferred stock or other forms of leverage. And so I think that part is also why a treasury company can increase its Bitcoin per share, whereas an ETF is really, due to the expense ratio, constantly decreasing its Bitcoin per share. So I think that drawing the comparison between the ETF and a treasury company helps clarify where the value creation is coming from and what is causing MNAV on a almost equilibrium state to be greater than 1x. And then the entire debate is, okay, let's say it's greater than 1x. Where does that land? And I think this conversation has been very interesting in that regard.
Actually, if I may, 2 points to address here. In 2023, we wrote actually a report how MicroStrategy's management, every time when the share price was trading at a 20% premium, they would come out and issue shares. And we were almost like timing these share placements, perfectly and really like within a matter of days, really. And it just showed that, this is a very smart financial engineering team. And of course, they have become a lot smarter, but it was really trying to, whenever you call it the bull market sentiment, when people became more optimistic. But of course, you're using them as an expense to pay the existing shareholders, right? So you're waiting for this premium and that premium paid, as MicroStrategy calls it, a yield. But of course, it's the new shareholders that are really buying shares at 120% back then. Of course, now they're buying it much higher. But I think you said it correctly that also it's a matter of volatility. And a few months ago, MicroStrategy was trading at a 200% vol. Bitcoin was trading at like a 60-70% vol. But now Bitcoin is at a 30 to 35% vol versus MicroStrategy is at a 50 to 60% vol. So volatility actually is just like 1/3 what it used to be just a few months ago. So I think that's also like a time where investors don't see the right tail right now. That's a difficult time, of course, where MicroStrategy cannot really issue these convertible bonds. So there is not a lot of leverage possibility to increase because there's no value really in the option. The option value is just like too low right now. So it's almost like MicroStrategy is slowly converging to an ETF. Yes, they can do, these esoteric, top of the pyramid kind of, structures right now, but they're not really raising a lot of capital, right? They're raising, 100 million, 200 million, 500 million, maybe like $1 billion. But, as I was saying, at the peak, on a 30-day window, they raised like 15 billion, and we are really far beyond this peak. And I think that's why the NAV slowly starts crumbling. And I think when you look at even like the last month, MicroStrategy is sort of like flat up, similar as Bitcoin versus, a year ago, it had, of course, a huge beta to Bitcoin. And I think one thing that kind of we also came across is the NAV only really started to explode last year in February. And, we think this was when the average Bitcoin value, reached sort of like 40 to 45,000, which is sort of like the average car or the average entry job in the US. And I think that's when the Bitcoin itself became too expensive for a lot of retail investors because, they want to hold a whole Bitcoin, right? You don't want to hold like a fraction of a Bitcoin. And I think that's really when people started to buy really MicroStrategy and these proxies. And that was really the time when the NAV started to, really explode. Of course, there was in the beginning in 2020 because it was very new, but then the NAV came really in, quite a lot and traded, around 1 or just a little bit above it and below it. But I think there has been this move. And again, the capital raising from MicroStrategy has been, very quiet, very slow now the last couple of weeks and months. And I think that's kind of like how they manage the NAV, that the NAV doesn't crush too quickly, because if it goes back to one really, and then a new bull market comes, it wouldn't be high enough to raise massive amount of capital that you can only really do at a massive premium.
Really wondering if Gary is convinced now to maybe diversify a little bit outside of Bitcoin into some Bitcoin Treasury companies.
Well, look, I own some Bitcoin Treasury companies. I'm just trying to understand how I value them, right? Like, I've heard people say, hey, I should buy MetaPlanet over MicroStrategy. And I'm like, you want me to pay a premium? Like, you're telling me that 5X is better than buying it 1.8X? I just don't understand that. It's like buying ExxonMobil and going, okay, I'm going to buy ExxonMobil. They have $1 trillion worth of reserves sitting on their balance sheet, and I'm going to pay them 1.8, but I'm going to go pay Devon Energy over here, a little small independent, a 5 because they just started. It makes no sense to me, right? The MetaPlanet play is a play on those securities over there because Japanese people can't buy Bitcoin without paying a 52% capital gain. So they go buy the paper and they're paying less than 20. I cannot compare. I think it's a mistake for me and my family to compare MicroStrategy and MetaPlanet. These are totally different trades. One's a Japanese security arbitrage. Bitcoin is an arbitrage. It's like Mercury. It's going to fill in every gap. That's what's happening here with MicroStrategy and all these, I think. Right? I think that's what's happening. For me to pay a premium, I have to believe MicroStrategy is effectively boarding gold. And that gold is going to have a super premium at some point in time. But why would I pay a premium for future earnings in a stock market when I can buy Bitcoin right now today at today's price and there's no imputed future value? To me, that's a real arbitrage issue. Equities are valued for their future, and Bitcoin's valued only at today's value, which is a commodity, right? That's how commodities get traded.
I would like to summarize in 3 points, Gary, and each of them could have their own quantitative metrics. It would need much more time, I think, but we could try to simplify. I think it all comes down to size, velocity, and aggressiveness. So, and I would like to emphasize that I'm extremely aligned with what you said, that you cannot compare strategy and MetaPlanet and for us, in our case with capital B, it is different time horizons, different countries, different even financial setups that those companies are in, and you cannot say, MNAV2 is good for strategy, MNAV2 is not good for MetaPlanet, or MNAV5. I mean, it's not the same size of company. It's different even type of investor profile, risk return profile. However, the common point is it's the same playbook. So, for example, the huge advantage of strategy is the size, the track record, and the tools that they have developed that are the most diverse tools in the market. And that you said, Gary, that it starts to complexify a little bit, but it's because they are the best positioned in US capital market and global capital markets to issue specific securities into specific capital pools. And due to their size, they are the ones that benefit the most from global Bitcoin adoption and global Bitcoin Treasury company adoption. And so that in and of itself is an immense opportunity that, in my view, a 2x premium doesn't really capture in and of itself, which I believe it's maybe why you say that MNAV2 is quite cheap in some ways. And then when you see MetaPlanet, the huge advantage is that they are in a very big market as well, in some ways, in different ways, with a lot of local retail market participation, and so on. On top of that, they have global visibility. They have a playbook that works. And it's much easier for Metaplanet to go from 15K Bitcoin to 30K Bitcoin with a BTC yield of 1,000% than for Strategy to go from 500 to 1 million. But at the same time, when Strategy goes to 500K to 1 million, it's billions and billions of dollars. It's going to become $1 trillion or $10 trillion company. And so the options you have when you become a $1 trillion to $10 trillion company in the US will be immense. And they will effectively become a form of a bank for financial markets by issuing credit and completely eating credit markets. So then when you look at Metaplanet, of course, and us on our side in Europe with as well big capital markets that are fragmented, but a lot of capital is there as well in credit markets. Well, the opportunity that investors see is that you are more early stage, more risk. So Gary, I completely get your point. Like you are starting with Bitcoin, and then you see Strategy is a bit more risky than Bitcoin, but a bit more potential returns. And then you see smaller Bitcoin treasuries, and it adds a little bit more risk because they are more early stage. What the more early stage companies can provide is sometimes more velocity, but with a bit more risk because there is less track record potential. And that's where I mentioned as well the teams. Like it's the teams that are able to potentially give the exact execution of the right playbook with the right financial instruments in the right market and so on. And then there is the aggressiveness. And with the aggressiveness there, that's where I was mentioning the months to cover the MNAV. You could even have Strategy at some point if the rating agencies are starting to really consider Bitcoin as an asset on the balance sheet, start to rate Strategy issuance as investment grade and so on. And there you could start to see an MNAV of Strategy that could go much higher because of the fact that their capacity to issue these securities and the capacity of institutions to subscribe could go very aggressive as well. And so aggressiveness can also be seen for big companies or smaller companies. And it depends on the quality of their financial instruments and the robustness of their balance sheet, which is a mix between the velocity and the size.
To get the audience to understand a little bit more of this concept, I think it would be great to have your insight from everybody in the audience on the different capital strategies, correct? So you're talking about how fast can they accumulate or double their Bitcoins, correct? How do they do this? Like, what are the different ways that these companies are using to accumulate more Bitcoin into their balance sheet? I think it would be great if you guys can give some insight into the most common strategies and therefore what are the differentiation factors for the different treasury companies by using these different ways of accumulating more yield. Anybody open for the audience? Open for the group.
Well, I can start quickly. I'm sure Pierre would like to continue. Well, you have a straight equity ATM type structure where you issue shares and you sell them in the market. In France and Japan, we don't have the same, but we have equivalence with intermediaries. You have a private placement of equity with individual institutional investors that want to buy shares out of the market. You have a traditional convertible bond in fiat. That's what Strategy has done and has greatly accelerated the strategy. And that comes also with the downside of having short sellers a lot. But it's a very effective strategy to also lever up a bit the balance sheet. You have the BTC denominated convertible notes. That's what we have created for the first time out of Luxembourg with an SPV. It's a bankruptcy remote SPV, and it allows for investors to directly subscribe in Bitcoin and to have to know that if the company doesn't execute well, over 5 years, they could, the worst case could be to get back the Bitcoin if the company doesn't execute. And so That's something that we have created to allow for Bitcoiners around the world that can contribute large amounts of Bitcoin to completely transform the premium in one operation from the premium into net asset value. And that is the very substantial part of what we can bring in terms of velocity and aggressiveness. And then you have a whole series of warrants that you can issue either to private placements or to public equity. And you have public offerings that you can do to give access to new securities to the market. And you have preferred stocks as well that Strategy has started to do. And you have companies like Strive that are also looking at potentially acquiring companies that are traded at a discount to their cash balances and so on. So many type of options to increase the number of shares, but at a lower pace than the number of Bitcoin in the balance sheet, which increases Bitcoin per share.
Very interesting. Let me hold that thought there. I think it would be very interesting to also get the view of Pierre. But I do find actually interesting that out of all of the different strategies to accumulate more Bitcoin that you mentioned, they're all financial engineering, correct? There's no mention yet of using cash flow generating businesses to actually buy the Bitcoin. But I like to get Pierre's opinion into what are the different strategies and where is the differentiation factor, correct?
Yeah, so I mean, to your point about the cash flow generating businesses, if you have one, what would make sense would be to sell the cash flow generating business and to put the proceeds into Bitcoin, right? So I think that the cash flow generating business only makes sense to the extent that there's perhaps a regulatory need for it, right? So sometimes stock exchange listings require there to be operating cash flow. Or that there's a need from a financing perspective that it actually allows you to access better rates because lenders are more comfortable lending against a cash flowing business than against Bitcoin. On the financial engineering side, it really comes down to one simple equation is what is the compound annual growth rate of Bitcoin over the long term, and what is the cost of capital? And so you just subtract one from the other, and that gives you what excess spread accrues to the common stock. And so when we look at the perpetual preferreds, for example, that Sailors put out, let's look at something like STRF, for example, where let's say it has a 10% dividend, and it's a perpetual preferred, so there's no refinancing risk. So he can't get liquidated on it. It's non-recourse. All that's necessary for the common stock to benefit from STRF is for Bitcoin to do better than 10% over the long term, right, on an annualized basis. And so that's really the extent of the financial engineering. If you are bearish on Bitcoin, then I think that you should be bearish on MSTR and on the treasury companies. If you're bullish on Bitcoin, and you expect them to be able to outgrow their cost of capital, that's when you should be bullish on treasury companies. And the only question is how bullish is at what valuation, right? And at what MNAV is a plausible entry point. And so the second issue really is around the size of the market for preferreds. So preferred stock historically has been a fairly small part of capital markets in the United States. And I think that the real reason why it has been fairly small is because the products have not been very good. If we have Bitcoin powered products out there that have higher returns and lower risk than the competition of other preferreds, then I do think that the preferred market will grow. And that Sailor will be able to attract capital to these instruments. On the flip side, you could ask, well, why would somebody buy the preferred stock instead of buying the common stock or buying Bitcoin outright? And it really comes down to matching their liabilities. So if you want to keep 6 months of fiat laying around, in order to be able to cover any kind of emergencies that come up, or to repair your car or whatever it is. It's good. It's a good idea to have a cushion of fiat laying around. Today, you would keep that in a money market fund. Maybe that's earning 4% or 5% optimistically. With Saylor's newest offering, STRC Stretch, he's offering a 9%, and it's the equivalent of a money market fund in many regards. And so that's where we see that he's creating products that are competing against incumbents by offering a higher return, and he's able to offer a higher return because there's an expectation that Bitcoin will do very well in the future from a CAGR perspective. He's put out various numbers. I would say that today the historical CAGR for Bitcoin over the past, let's say, 5 to 10 years has converged to between 30 and 50% annualized. And so even if we expect that to go down, to decrease over the coming decades, and to go down to 20%, by 2050 or something like that, then all of this financial engineering still makes sense. And so I think that that's really where the bulk of the value accrual will happen for the treasury companies, is in the ability to borrow dollars to buy Bitcoin.
What is the risk that gets, actually created if there is underperformance of Bitcoin for, let's say, a period of a few years? Like, what does actually happen there? What is the risk that investors should be aware of in buying Bitcoin?
Yeah, absolutely. So I think the biggest risk is the dilution of the common stock in order to make the payments for the preferreds, or to make the payments for the convertibles as well, right? Because those do have refinancing risks. So the convertible debt will come due over the coming years. And so there's a risk if the capital markets are closed and the only option for Saylor is to dilute the common stock, then I think that would really be the big adverse scenario for the common stock shareholders. Now, folks have suggested that he would sell Bitcoin instead of diluting the common stock shareholders. I don't think that's the case, but we'll see.
Well, it all comes down, how long the premium is going to stay up. And I think a lot of people are simply just not aware at what kind of premium a lot of those companies are trading. They just assume they're buying direct Bitcoin exposure. And I think it's very similar how how people tend to spend weeks and months to researching, which TV or which refrigerator they would buy, for $1,000, but they can buy like $100,000 of stock in a heartbeat, basically, right? And I think in Japan, yes, the argument was in terms of the tax you need to pay by trading cryptocurrencies. But I mean, that tax law is probably going to be changed within the next 6 to 8 months. And of course, then I think the premium of 6 or 7 times at a peak from MetaPlanet is probably going to shrink very quickly, because then people gravitate towards the ETF, which I think very likely is going to be approved next year. So I think it's just like a matter of time until certain regions are ready. And again, I think there is a lot of misconceptions among investors. What is the NAV? What is it? Where is it trading? And I think this is how MicroStrategy did really well in saying this is like a yield. So every time we issuing shares at a above premium level, we just call it a yield. To all the current shareholders. So I think a lot of people just don't realize that they're buying shares actually at a premium to Bitcoin instead of Bitcoin itself. And I think if that would be disclosed, I think there would be a lot less demand for these treasury companies. And I think we have seen this, for example, recently with Tom Lee's BitMine company, and a lot of pipe shareholders were able to buy at $5 versus suddenly the shares traded at at $40. And while the shares were not really registered yet, but the company traded at a valuation of like 5 billion, right? So versus they only had like 500 million in Ethereum. So I think there is just like this disclosure issue that is sort of like is tricking investors a little bit into this. And again, you could have bought MicroStrategy around November last year, and you would still sort of only be breaking even now, versus, of course, Bitcoin is 50-60% higher.
Markus, I would like to respectfully disagree very strongly because there is effective evidence of the contrary. If you look at what happened in January 2024, there was the approval of the US ETFs. And if you compare the chart, I invite you to open Google Finance to see the comparison between Bitcoin and strategy over this period. You see that you put over 5 years, you see that the price of Bitcoin and strategy is slightly the same. And you see that what happens at the beginning of 2024 is a huge outperformance of Bitcoin by strategy exactly at the time where the ETFs were approved. And that is because for the first 3 years of the strategy, the strategy was defensive. It was, as Pierre said, a term of treasury management to avoid the inflation of the currency. And at the beginning of 2024, strategy had a dilemma. It was how to continue to completely outperform the market on a Bitcoin standard. Well, it is to build an offensive Bitcoin Treasury company and to issue financial instruments that allow you to maximize your Bitcoin per share. And so effectively, the real Bitcoin Treasury company playbook, the full one, has really started with strategy going strong on this model since the beginning of 2024. And you can see that you have made examples a lot of performance over 1 month, performance over 6 months. A Bitcoin maximalist doesn't look at a performance over 1 month, 3 months, or 6 months. We are oriented at least towards 4 years, but the best time horizon is probably 21 years, and the right one is forever. And for a Bitcoin Treasury company, based on a Bitcoin standard, the performance over 1 month shouldn't matter. Then I fully agree with you on the fact that it is not the perception of a lot of new retail investors that come in and think that it is effectively a form of Bitcoin exposure and nothing else, and they don't see that there is a premium and that is much more risky. And I would like to say that, yes, it is risky to invest in a Bitcoin Treasury company with a short-term time horizon and without the understanding of both the premium and the months to cover and what the daily BTC yield, meaning the increase of Bitcoin per share, can be for a Bitcoin Treasury company. But the sole potential of the agreement on an ETF has been proven to not be a counter growth measure for Bitcoin Treasury companies. What matters is what are the financial instruments those companies can issue, because that is completely different from what is an ETF, and that will drive much stronger demand than an ETF.
On at the moment in the market, and what we see is still an expansion of new issuance of Bitcoin Treasury companies. A lot of them come to Keyrock, and they explain us that they're going to go to market in the coming months as well. How do you see the market evolving in the coming years? Is this trend going to continue, or are we going to have consolidation where maybe the larger treasury companies would start, taking advantage of the market dislocations to acquire and merge with the new up and coming treasuries? What do you think happens there?
I don't see any strong catalysts for M&A, to be honest. I do think that there's going to continue to be more and more Bitcoin Treasury companies that emerge. I think that there is a very, the longer they've been around, right? The longer they've been in the market, the more credibility they have, the more track record they have. And so there may be a dynamic where the older Bitcoin Treasury companies continue to do very well, even in the face of competition, especially if they're able to continue to innovate on the financial engineering. right? So a lot of people see financial engineering as a negative. I see it as a positive. I think that's where the value creation happens. And so as long as they stay focused on increasing the Bitcoin per share, that the incumbents are going to continue to lead, and that the new treasury companies are really going to be contributing to everyone's success in the sense that they too are buying Bitcoin. And so they are contributing to Bitcoin's underlying performance as well. There will be cycles in the sense that I think there will be cycles, not that we'll see treasury companies implode and have to dump all their Bitcoin, but we'll see cycles in the velocity at which they can raise capital. So there's going to be windows where they can accelerate their accumulation, and then there's going to be moments where they have to slow down their accumulation based on market conditions. But given that it looks like rates are going to come down here in the United States, and that Jeremy Powell is going to either get fired or cut rates, that would be a huge tailwind for Bitcoin and for the treasury companies.
If the NAV is at 1, can you increase Bitcoin per share?
Yes. Look, the NAV could be at 1 for us, and we could issue a BTC denominated convertible bond with a 30% premium, and we would generate Bitcoin per share. However, it is true.
I was just going to say the companies have time on their side, right? So even if the company is trading at a discount to NAV, like Strategy was in 22, all they have to all that lasted was a month. And so they just have to sit on their hands, sit on their Bitcoin, and wait out the negative financial conditions and wait for opportunities where the MNAV expands.
We've come to our first hour. There are still a lot of people in the audience that are engaged into the conversation. I think it's going very well. If you guys have a little bit more time, we can cover a couple more topics. Just wanted to check with you if you're still available. Are we good?
I can take 10 minutes. Yes.
I've got a few minutes I can give you guys. I can't go much longer than maybe 5 or 10 though.
Perfect. Yeah. We'll start then going into closing remarks and conclusions. Thank you very much for all the great insights until now. It's been very educational for the audience and for everybody here. So just to start doing closing remarks, how do you see the future of the whole industry overall, and the companies, not only Bitcoin Treasury companies, but overall all publicly traded companies acquiring Bitcoin, and what recommendations would you give to the audience into how to take action into this new trend? Maybe Gary, you want to take it?
Look, I think if you're not allocated to Bitcoin, the best thing you can do is just whatever is in your portfolio. Most people that don't have an allocation to Bitcoin don't have a custody wallet. So if you're in a 401k, if you're in a pension, if you're in a Roth, if you're in a Fidelity account, look at your allocations that are underperforming and move into Bitcoin. And if that means you have to buy a micro strategy because it's easy, awesome. To me, I would get some long-term exposure to Bitcoin. To me, also, if I can buy Bitcoin and I don't have to pay a multiple for it, and I don't understand these multiples, most investors will not understand the difference between one multiple NAV over another. I'm not even sure these NAVs mean anything. I just want to raise my hand. We are making new data up as we go, new technical terms, and we're saying these actually have some history. They do not have any history. These are made up numbers. You cannot tell me what the MNAV of NVIDIA is. If you can, it's all paper future profits. Like we're talking about someone acquiring gold in the ground with no refining risk. They have it in their vaults. Now that's worth something. Is it worth 4x? I don't think so. I would rather buy Bitcoin at 115 than pay 300 grand for effective 300 grand for Bitcoin. To me, now, would I take both of those? I'd probably buy both of those, buy Bitcoin and buy MicroStrategy or any of these other guys that have some experience. That's the other challenge. Who's got experience doing this? We're in new territory here. GameStop has $6 billion, $5 billion sitting on their balance sheet. We don't know what they've done. They're going to get punished by the Bitcoin community if they don't actually do what you see. I see Alexandre nodding his head. Not all of these guys are going to make it. They have used Bitcoin as the life raft, and a life raft does not mean you survive the fucking journey. And I actually think there's going to be a lot of M&A here, okay? And the M&A is going to get driven by these companies buying, putting Bitcoin on the balance sheet, and they're still broken companies. And those companies will get bought for their Bitcoin valuation. I could most certainly see that in a downturn, and that would be good for the industry. So I don't know that I have any more to add because I don't really understand some of these complex NAVs, as we call them.
That's great, Gary. Very actionable advice. What about you, Markus? What are you thinking?
Yeah, of course, I think, we are all very bullish Bitcoin here. It's just a matter of, how do you want to express it? I think we all realize a lot of investors, are hesitant moving their money into a cryptocurrency exchange and buying Bitcoin, that way. But of course, you can now sell any stock really and buy just the ETFs to get, direct, basically risk-free exposure in this sense, right? You don't need to worry about any marketing, that's necessary, because most of the NAVs is a matter, I think, of the strength of, the key marketing person there. But I think, again, I think there's a lot of, a big menu here for people. Everybody can choose how much, risk they want. If they just want, plain vanilla exposure, I think that's sort of like, fine. But I think the key thing is that, I think we probably don't really know yet what Bitcoin actually is or what it does or what it might mean. It's almost like, you want to acquire some, I don't know, call it Manhattan real estate, just, who knows what they're going to build there, one day. And I think that's probably very similar with Bitcoin or with some of the key digital assets, right? And I think that's sort of like the strategy from some of those companies because, the regulation in the US can also change with the next administration. I think there can be also some other, changes. And I think the key point really is to have some exposure because you never know, how it ends up. And it's just a matter of, how much risk you want to take or, do you want to sleep at night, or not? And I think the question really is, again, how much exposure do you want? And I think, we built some sort of like model that you can factor in, some of your, how much volatility you want to have in your portfolio and sort of like, looking at the round number. But again, I think people should have exposure to it. And I think you can easily have a roadmap, how it goes, materially higher from here because there's just people all around the world looking at it and being active in it.
What are you, Pierre?
Well
actionable advice.
I'd say buy Bitcoin. If you are interested in equities research and you want to read 10Ks and you want to do your due diligence, then I think that you should do that with Bitcoin Treasury companies before you do it with any other publicly traded equities, right? I think that they're going to outperform the rest of the market, and then you've just got to make sure that you're allocating well within that. If what you don't want to do, and I agree, don't stop at the marketing, right? So even if somebody's got great marketing on social media, I still think that you should go into the 10Ks and open up a spreadsheet and start doing some math. You have to do the research to understand the financial engineering, to understand where the value creation is coming from and where the value destruction could come from. And so I think that it's really important for investors to do their due diligence. And if they're not interested in doing that, then they should just go buy Bitcoin, put it on their hardware wallet, and verify it with their own node.
Fully agree. I would say three things. The first is to fully focus on Bitcoin. There is no second best. The second one is to allocate all of your long-term capital to Bitcoin. And the third one is to have a focus on Bitcoin per share increase and what can be the power of this on a portfolio over a sufficiently long-term time horizon.
Thank you very much, Alex. Thank you very much, everybody. Just closing remarks. If If you're interested to learn more about Bitcoin Treasury companies and understand in depth how they work and how to analyze them, Keyrock has made a publication recently on the topic, which you can find on our website with more in-depth analytics on the topic. Thank you very much, everybody, for the time today. It's been lovely, and I wish you all have a very good day.
Thank you so much.
Thank you very much.
Thank you.
Thank you.